Good morning, ladies and gentlemen, and welcome to the Center for Strategic and International Studies for our event today. We thank you for taking the time out of your week to join us, and today attending this event are distinguished leaders from financial institutions, multinational organizations, associations, and businesses. And we believe you play a very key important part in advancing green financing in the ASEAN region. So we hope today will be filled with great insights and new perspectives that can be useful for all of us, be it in future research, policies, and other efforts in ASEAN's sustainable economic transition. My name is Cynthia, and I'm part of the Green Investment Principles, or in short, GIP, specifically in the ASEAN region. And the GIP ASEAN chapter had conducted research that will be presented today for the first time regarding the current and future green financing landscape in the ASEAN region. Some of you might have also been handed the booklet, the research paper. In today's agenda, we have three main sessions, starting with the morning session, which will be the presentation by the GIP ASEAN team on our research findings and insights, followed by the panel discussion or dialogue with our esteemed guests, Mr. Donny Donosepoetro, Mr. Majun, Mr. Jiro Tominaga, and Ms. Yulanda Chung. And after that, we will have a networking lunch session outside, and returning here at 2 p.m. will be Dr. Majun's lecture on the impact of current geopolitical conditions on the green trends. Without further ado, we will start the event with some opening remarks from Bu Mari Elka Pangestu, who is also the co-chair of GIP ASEAN and the vice chairperson of the National Economic Council and Presidential Special Envoy for International Trade and Multilateral Cooperation. Thank you. Bu Mari's Zoom, please.
Good morning, everyone, distinguished guests, colleagues, and friends. I hope you can hear me fine. I'm here in the U.S. With our delegation, trying to have talk with the U.S. It's quite late in the evening for me, but I wanted very much to be there to also meet all of you, distinguished guests, colleagues, and let me begin by expressing my deepest appreciation to the organizers, CSIS Indonesia, Global Institute for Prosperity, and Tenggara Tenggara Strategy for bringing us together today for this important dialogue. I would also like to thank our institutional partners, especially the ASEAN Secretariat, development finance institutions, private sector actors, and civil society organizations for your continuing engagement in ASEAN's green transition. I would also like to extend a special thanks to my friend, Dr. Majun, who is the co-chair of the Global Green Investment Principles Network, of which I am the co-chair with Donny of the ASEAN GIP chapter or Green Investment Principles chapter. And so we're really thankful because this is going to be promoting or launching one of the research being done by the GIP ASEAN Secretariat. So I just want to really give a few opening remarks and just to congratulate the report writers that this report could not have been more timely or more urgent. If we start with the context, you know, I'm here in the U.S. Looking at how the tariffs that have been imposed by the U.S. is increasing uncertainty in the trade environment, and it is also the time of the World Bank and IMF annual meetings, where the whole discussion is about how the global growth is going to slow down. Everybody's growth is going to slow down. So there's a lot of uncertainty and discussions. And yet we know that there is one crisis, which is the existential climate crisis, which is not going to go away anytime soon. And the world is going to to be facing continue, besides, happening in the world globally and the uncertainties, trade uncertainties and the slowing down of growth, we are still facing the poly crisis, which we had discussed so much in the last few years, and especially something like climate change. It doesn't go away. You can think about other crises as having ups and downs and cycles, but the climate crisis, or the triple planetary crisis of climate change, biodiversity loss, and pollution, is not something that's going to go anytime soon. And in fact, it's very present threat. It is here, and it is acutely being felt our region. We know that in the warmest of temperatures of planets in the last few years, and the global average temperature has risen by 1.6 degrees above those of the pre-industrial period. So it does raise the urgency. And we know that under a business as usual scenario, we are going to experience lower growth, lower life expectancy, lower productivity, lower yields for our agriculture, and all that is going to have an impact on our populations, especially the most vulnerable ones. And the rising sea level are threatening our coastal communities. The extreme weather events are disrupting our food systems and supply chains. And Asia, and particularly Southeast Asia, is among the most vulnerable regions to climate and related risks. For instance, mainland China, Bangladesh, India, Vietnam, Indonesia, and Thailand are home to the most people on land that is projected to be below average in terms of annual coastal flood levels by 2050. So together, those 6 nations account for roughly 75% of the 300 million people on land facing the same vulnerability at mid-century. So the increased frequency and of natural disasters, which have a link to climate change, is increasing and having disastrous effects. So it's real, and it's real to the people that are most affected, which is the poor and the vulnerable. But at the same time, we have the opportunity, and I think this is really where we need to focus. ASEAN is one of the most dynamic and rapidly growing regions in the world. We were expected to grow at 4.5%, but with all the recent uncertainties and projections of a slowdown in growth, we probably will grow at least 0.5% lower this year. And what happens in the following years will be a lot dependent on the risks that we see moving forward, including the climate risks. And we are still growing above other regions. But in fact, if we can chart the right course, we can lead, not follow, in building a resilient and sustainable economy. So really, I think the story that we must be very committed to is, despite all these uncertainties that we're facing, in fact, we'll all need to work hard at doing our own domestic reforms and our own domestic homework, including addressing climate change. And in fact, the new drivers of growth could be and will be greening our industries as well as green industries. And I do believe, still the story of Nick's turn, that investing in sustainable infrastructure is still the growth story of the 21st century. But to do all that, you need financing, and that's where green finance comes in. We need the capital to support our energy transition, our infrastructure development, our sustainable food and land use systems, and it's huge. I mean, by any estimate, they say for the globally it's about 1 to 3 trillion. I think Indonesia's estimate is something like 280 billion. So for up to 2030 or 2050, And the challenge is that this capital needs to come from the private sector. The government and concessional funding can only finance part of it. So I think trying to understand how green finance can be scaled up is really something which matters a lot. And that's why this research matters. This study done by, it's the first study done by the GIP ASEAN Secretariat. This study offers evidence-based analysis of where ASEAN stands in terms of green finance and where it needs to go. It brings together country-level assessments, regional policy frameworks, and finance trends in one coherent framework. And it takes stock of progress, but also maps gaps and identifies the constraints and the opportunities for scaling up. And what is important about the study is that it frames green finance not as a niche agenda, but as a main driver, as a strategic driver of our region. It links back to my earlier point that I think greening our industries or identifying green growth opportunities, it's going to be the new way to grow. And for that, you do need to make all this mainstream and not as nice to have, but need to have and important to have because it is going to be your growth story. And we need to go beyond climate mitigation to include nature, adaptation and resilience, and livelihoods, or more broadly, sustainable development. So today we are hopefully going to be launching this report. And it is not just about launching a report, but hopefully it's a beginning of a dialogue, a discussion, a call to act together with knowledge and urgency. So I think I won't go too much into the key findings from the research. There will be presentation of that. But just a few insights that I can, my main takeaways from reading the report is that the region has made progress. We have seen growth in green bond issuances of about 50 billion by the start of 2023. And part of it is because there's ASEAN green bond standards now, but the progress is uneven between member states. And second, the regulatory environment is rapidly evolving, and there are ASEAN taxonomies and green bond ASEAN Sustainable Finance Taxonomy and green bond standards. And these are really commendable regional initiatives. But as we all know, domestic alignment varies significantly and risks of fragmentation still persist. And what we need is greater regulatory coherence across borders so that capital flows are not constrained by inconsistent ESG definitions or unclear screening criteria. I think the report also underscores the importance of governance and institutional capacity. And here we really on the capacity building that's needed. And finally, the financial instruments landscape must be diversified. While green bonds have grown, blended finance and transition finance remains underutilized. So the private sector will need de-risking mechanisms to be able to support a lot of these high risk clean energy, transport, and agriculture transitions, especially in hard to abate sectors. And one very important component, and Indonesia is also, Indonesia and other ASEAN countries are working on this also, is the carbon markets, particularly voluntary carbon markets. We must build credibility through strong governance, data quality, and social safeguards. We really must avoid race to the bottom. So let me just give some framing questions as we move ahead in our discussions. What do these findings mean for us? And how can we ensure that they can be integrated and not a separate system? How can it be become the core of our financial and economic strategy? And this will require what kind of leadership, coordination, and innovation? How can we collaborate better across ASEAN countries, whether it's harmonizing taxonomies, regional data sharing platforms, or joint project pipelines. I think getting projects on board, because I think part of our objective is to also have investments cross-border on these projects, and how to really crowd in private capital by scaling blended finance instruments. I hope we can have a discussion on the kinds of instruments that could work in Indonesia, in ASEAN, and what is the role of development finance institutions such as ADB, who is going to be a speaker later, and philanthropic capital. And we must never forget the human dimension. Green finance must be just finance. That's why we always talk about just and affordable transition. We must be able to create green jobs, support women and youth, and empower the local communities. So those are just some questions for the way forward. Let me close by saying that green finance is not just about channeling money into clean energy or conservation. It is about the future economy of ASEAN, one that is green, resilient, inclusive development, and does not leave anyone behind. So I really hope that today's discussion will inspire new partnerships, practical ideas, and above all, action. Let us use the insights from this study not as an endpoint, but as a beginning and a springboard for change and a call to action by every one of us here today and all representing different stakeholders. Thank you. And I'm very much looking forward to the results of our discussion today.
Thank you so much, Bu Mari. Now we'd like to invite Dr. Majun for your opening remarks. Yeah.
Ibu Mari, Pak Donny, Pak Jose, Tominaga-san, distinguished guests, ladies and gentlemen, good morning. It's my great honor to be here again. I was here about 1.5 years ago attending actually the launch ceremony of the GIP ASEAN chapter. And today, Ibu Mari is not here, but I saw her like every few weeks. I saw her in Tokyo, in Hong Kong, and now on the screen, and they will continue the dialogue on many issues, not just on green finance, but also on green trade and many other more important issues. Today, on behalf of the GIP Steering Committee, I'd like to welcome all of you for attending this seminar and the launch report of the green finance landscape in ASEAN. And big congratulations to the GIP ASEAN Secretary and also CSIS for really authoring this wonderful report. As Ibu Mari said, it's a very in-depth analysis of the landscape of sustainable finance in the region and looking to a lot of issues, gaps, and proposing a range of, I think, very practical solutions. So these are the issues that we really need to discuss in depth and really focusing on how to implement these ideas going forward in the region. My impression that this is at least what I said back 1.5 years ago here, ASEAN has a huge demand for green finance. At that time, I had an estimate showing that 80% of the renewable financing need has not been met, meaning your demand for finance is like 5 times bigger than the actual investments made in the region, at least the renewable sector. But I think in many other green sectors, probably the same. Green transportation, green building, adaptation, and so on and so forth. So really, we need to tackle many of these issues, including those in the report, which has to do with taxonomy, has carbon market, blended finance, and so on, but also has to do with capacity. And as a capacity building platform, in fact, the Green Investment Principle was launched back in 2018. At that time, it was initiated by the China Green Finance Committee, which I chair, and City of London. And we were joined by quite a few other global organizations such as IFC, Policy Institute, World Economic Forum, and the UNPII in launching the the green investment principle on the global scale. Then over time, the GIP expanded its footprint, not only at the working group level, which we set up actually for, to cover issues on disclosure, on risk management, on financial products, and also on green finance, transition finance recently. But also we expanded to the region, especially emerging markets, developing economies. So last few years, we set up a few regional chapters of the GIP, including in Africa, in Central Asia, and in ASEAN. And ASEAN is the recent, right, the most recent effort. And with all these regional chapters, we're expanding our membership of the green investment principle rapidly. And also, we offered a lot of capacity building initiatives through online webinars, seminars, and collaborating with CASI, which is another global platform my team has set up on training and TA. And as of today, we have 50 formal members of the green investment principle. All these are largely financial institutions. They manage about $50 trillion committing to implement the green investment principles in the region. And we also have like 20 supporting organizations. So in total, 70 well-known organizations from all over the world. I think more than 20 countries and jurisdictions committed to implement the green investment principle. Now, many of you have talked about, especially Ibu Mary, on the key issues. Let me also take this opportunity to highlight a couple of topics which are relevant to the discussion in the report and also relevant to my work in the past couple of years. One is taxonomy, which has been mentioned repeatedly in the report as the foundation for sustainable finance development, because you need a taxonomy really to define what is green, to prevent greenwashing, and also you have to harmonize the taxonomy across jurisdictions so that it doesn't become a barrier for cross-border transactions. This problem was experienced by China, Europe back many years ago. China was the first to initiate its formal taxonomy. I was a person in China leading the development of first green bond taxonomy 2015. And Europe came up with their taxonomy 2018, 2019. So at that time, we began to talk about harmonization because I realized that China has a taxonomy which is different from the European. If the two markets don't form what I call same language for defining green, then the Chinese green bonds will not be sold in Europe because they won't recognize what China green as their green. And after conversation, we decided to develop a working group to set up a common ground taxonomy between China and Europe. That was started about 4 years ago, 2020. And I've been a co-chair of this common ground taxonomy working group under the IPSF, which is the European-led international cooperation platform. And the success story of the CGT, or Common Ground Taxonomy, could be a reference for ASEAN. After 2 years of work on Common Ground Taxonomy, we published this version in 2022. And immediately after the publication of the CGT, the Chinese issuers began to use the CGT as a label to label Chinese green bonds issued internationally, especially to the European investors. And Europeans just buy by seeing there's a label of Chinese green bonds that's CGT aligned. And more recently, roughly about a year ago, Singapore thought it's a good idea for them to join the CGT, and they raised hand to me and to the EU co-chair saying, we want to be part of the CGT, and can we create something called multi-jurisdiction common ground taxonomy? And we said yes. So we brought in Singapore, and after 1 year, and end of last year, November, the working group produced the multi-jurisdiction common ground taxonomy, which is called MCGT for short. And now this MCGT has 111 sustainability items, including all the usual stuff like solar, wind, biomass, water treatment, solid waste treatment, green transportation, green building, and so on. And this MCGT is waiting to be used by global market players now to label their green assets and sell them in the international markets. But I think a more important effort is actually have more countries to join the MCGT in official capacity. That's why in the recent year, I've been lobbying Brazil. I've been lobbying South Africa. I was there just last month. And I'm lobbying Indonesia for them to consider joining the next version of the Common Ground Taxonomy. And if all of them come in, and we will make it a really international benchmark for interoperability of standards globally. Because the US doesn't have a taxonomy anyway. They won't have a taxonomy in any time I can foresee. But excluding US, you have Europe, you have China, you have the biggest other G20 countries like Indonesia, and, Brazil and South Africa, it's naturally gaining a lot of credibility and become the benchmark for many, many other countries to participate in the exercise and use it for cross-border green capital trade. So ASEAN could consider using the MCGT as a basis for harmonizing its domestic taxonomies, and also for large economies in ASEAN like Indonesia to consider joining formally the CGT working group and being one of the members in producing the next version of the common ground taxonomy. My second point has to do with the carbon markets, which were also mentioned in the report. The market segmentation has become a problem. I heard that there are 37 voluntary carbon markets in the world, and many of them are very new. They're illiquid, they're segmented, and they adopt standards which other countries don't understand. And that become a problem because you need a demand and supply, and you need the volume to go up, really to facilitate the real transactions and helping the decarbonization projects with enough of funding. But most of the markets cannot serve their function due to the current situation. And because the standards, even you think my standards are high, but the other countries don't recognize it, then there's no capital flow into the market to buy your carbon credits. My view is that we have to harmonize the standards among the 37, and in the future could be 180 different voluntary carbon markets. And who is going to do the work? In fact, there's a very important organization called ICVCM, Integrity Council of Voluntary Carbon Market, which I used to be a board member until recently. And they have developed a set of a core carbon principle, which is a high-level principle for international carbon market operator to follow and to use as reference. I think this core carbon principle can be used as a uniting sort of a tool for enhancing interoperability of different carbon markets. And ASEAN and Indonesia in particular can consider using that as a benchmark. The other big problem is that the cross-border green capital flow through the carbon markets are being segmented. In a lot of countries, they're unclear whether I want to encourage or discourage cross-border buying and selling of voluntary carbon markets for fear that this may lead to corresponding adjustment and also adjustment to the NDC. Now, these issues need to be resolved as soon as possible. Otherwise, it becomes a very important source of uncertainty for whoever wants to invest in cross-border voluntary carbon markets. And also, I think Article 6, which encourage rich countries to buy carbon credit from low-income countries, this mechanism has to be implemented on the ground. So against these issues, we are recommending actually setting up some sort of international coordination mechanism to harmonize or at least enhance the interoperability of standards, to clarify the cross-border trading rules, and also to encourage countries to sign bilateral agreements from the rich countries to actually buy more credits from the low-income countries. The third topic is on transition finance, which is also mentioned in today's report. I would say that the starting point at the global level is the G20 transition finance framework, which I was involved in drafting back in 2022. At that time, I was the co-chair of the G20 Sustainable Finance Working Group. After that report was published, a lot of countries and regions began to implement these high-level principles. Let me just give you one example of one Chinese green finance pilot city that's called Huzhou. They've been doing essentially implementation of the G20 principles in a systematic way by setting up a few things. Number one, they have a transition taxonomy already, 100-something items on all major carbon-intensive sectors, steel, cement, petrochemical, and the textile and so on, what are consisting of the qualified transition pathway. It's there in the table. Secondly, they put all the qualified transition projects into a government-owned project database, and they share it with the bank. So the bank will go there to look for these already qualified transition projects. And thirdly, the government gives subsidy for the transition loans. And whoever gets a transition loan from the database, you get an interest subsidy from the local governments. And fourthly, they created what they call carbon ledger system, meaning they do carbon accounting for the companies for free. The government does it, right? Instead of a consulting company charging a lot of money for each of them, and they do it for free. And then after the carbon accounts are created with scope 1, scope 2 number, they send it to the bank for free. So Yulanda, you don't have to do the carbon accounting for your companies anymore. It's all done free within a local economy. And finally, they produced, in fact, my team helped the Hojo government to produce a transition plan template to help the company to design a transition plan towards net zero. It's essentially a big document. We have all the 8 chapters written already, with all these numbers missing, and the company is putting the number and become a transition plan and show to the bank. Again, substantially reducing the cost or additional cost incurred related to transition finance. And I think these efforts are very, very useful in familiarizing the transition finance concept within the local community and reducing the cost of operation and putting incentive for them to take up the transition loans. Now, just a final word on capacity building. We have created another big platform called CASI, Capacity Building Alliance of Sustainable Investment. That was about end of 2023 during the COP. And GIP is a member of the CASI. And now CASI is able to offer a range of services, including big forum. We do like 4 big forums every year. Last year, we trained roughly 5,000 people from emerging markets under the big forum, and also the monthly webinar. These are the things which are available to all members of the GIP as well here. And also, we are creating an online platform called CASI Academy. And within the online platform, we have 26 modules, 26 hours of sustainable finance courses contents already. And we're going up to 100 hours by next year. So all of these sort of resources on capacity building can be utilized by our GIP members here, GIP friends here, and the community here. If you want to enjoy the capacity building resources at a lower cost than otherwise. So once again, thank you all for joining today, and thanks to CSIS and the GIP regional chapter for hosting the event. I'm looking forward to the wonderful discussion. Thank you.
Thank you so much, Dr. Ma, for your encouraging remarks. I forgot to mention that Dr. Ma is the founder and president of the Institute of Finance and Sustainability, and he's actually one of our speakers who have traveled to join us today, along with Ms. Yulanda Chung. So thank you again for being here. Next, I'd like to invite Fia and Intan to present the GIP ASEAN's research finding and insights. In the meantime, while you guys are setting up, perhaps I can briefly introduce GIP ASEAN. Here, for those unfamiliar with the GIP initiative, the Green Investment Principles is a set of principles launched in 2018 in order to promote sustainable finance in developing nations along the Belt and Road. With 48 global institutional members, GIP focuses on knowledge sharing and capacity building. So the key outputs include annual reports, risk assessment tools, and we have regional chapters in Central Asia, Africa, Southeast Asia, aiming to catalyze environmental and socially responsible investments. The GIP ASEAN chapters is co-chaired by Bu Elka Pangestu and Pak Donny Donosepoetro, with support from the CSIS as the secretariat. Our activity this year, among others, is the Green Financing ASEAN Landscape Research, which we'll be presenting right now. So, go ahead.
So good morning, everyone. My name is Via, and I'm from CSIS Indonesia. I'm very excited to share with you the recent findings of our research. Today, we will delve deep into current landscape of green financing in Southeast Asia, looking at the recent trends and then the challenges that we are still facing right now, and also the opportunities ahead. I hope the research will give us a better insight into how we can move forward in accelerating green finance in Southeast Asia. Okay, so let me begin outlining the 3 key objectives of our research. First, we wanted to map out the key existing policies and regulations and initiatives related to green finance in Southeast Asia, including both national and also regional level. And then secondly, we will analyze the current opportunities and also challenges, like what are the factors that are promoting green finance development in the region, and also what are the factors that actually holding it back. And finally, we compiled a set of evidence-based policy recommendations that could help scale up green finance and also investment across the region. Analyzing green finance in ASEAN region requires a holistic approach. Therefore, in this report, we explore 4 key aspects that will be analyzed in the greater depth. The first is regional condition. which will cover about how green finance has progressed over time in the ASEAN region. And secondly is the policies and regulation in Southeast Asia. And then governance covers how green finance is actually managed by various institutions. And then lastly is financial instruments, covers various instruments that make up the green finance in Southeast Asia. These are the snapshot of green finance in the ASEAN. ASEAN countries are at actually different stages of green finance development. Some countries have made a great progress in piloting green finance initiatives, but others are also still in the early stages. So regionally, ASEAN has taken steps through several platforms. For example, ASEAN Infrastructure Fund, which was established in 2011, which laid groundwork for regional connectivity and sustainable development prior to the launch of ACGF. And then ACGF, which was launched in 2019, to mobilize investment in renewable energy, sustainable transport, and also climate resilient infrastructure. And lately, we have JETP, Just Energy Transition Partnership, which aims to support a fair, inclusive energy transition in Southeast Asia. Recently in Vietnam and Indonesia, backed by developed countries and international finance institutions as well. And more initiative actually driven by various institutions, just like we are here right now gathering together. GIP was established in 2018, promotes green investment practice, particularly along the Belt and Road region. However, there are several trends in ASEAN that become a challenge. Looking at the energy sector, currently in ASEAN region, coal remains dominant across the region, accounting over 80% of emissions. And what makes it even more difficult is the lack of commercially viable transition finance models. While there is growing interest in moving toward cleaner sources, we still don't have enough bankable projects or risk-sharing mechanisms to finance a large scale of shifting away from coal. And secondly, looking at the nature-based sector, which become a huge opportunity in ASEAN region, this space has seen many impactful initiatives, but they are still largely driven by governments and NGOs project and limited private sector initiatives and involvements, and even fewer market-based models that can scale despite the potential that we have. And lastly, I also want to share about to consider the potential impacts of global dynamics, like events like US withdrawal from Paris Agreement or ongoing trade tensions between major economies can actually influence ASEAN green finance ecosystem, which creates both uncertainty and also new strategic alignments that we need to consider ahead. Just looking at the green finance milestone timeline in ASEAN, actually looking at the timeline itself, we see a steady increase in green finance initiatives among countries. For example, like in 2014, Green Loan Initiative in Malaysia is first launched, and then in 2017, Green Bond Standards introduced in ASEAN, Malaysia, and also Indonesia. And corporate green bonds issuance in Malaysia and Singapore as well is introduced. And in 2018, the first sovereign green bonds issuance actually in Indonesia. And in 2019, a carbon tax firstly introduced in Singapore. In 2020, green loan incentive firstly introduced in Singapore as well. And then in 2021, the first version of ASEAN taxonomy was launched. And in 2022, recently, we have JETP, investment in Vietnam and also Indonesia as well. And the first climate risk stress testing in Singapore was in 2022. And in 2023, Indonesia launched emission trade system, the first in the region. also along with the sustainable loan incentive in Singapore and green taxonomy in Thailand. In the Thailand. And then in 2024, the green taxonomy was revised to be version 3 in ASEAN, and the first climate risk testing in Indonesia and Malaysia as well. So yeah, now, sorry. Okay, now I would like to talk about some policies and also regulations in ASEAN region about ASEAN taxonomy, which lays as a foundation of sustainable finance. ASEAN taxonomy itself is a non-binding but standardized framework to guide countries to lay out a foundation of green finance across the region. And while one of the key strengths of this framework is that it recognizes diverse environmental objectives across ASEAN member states. While countries have different climate goals or timelines, we're seeing growing alignments of national taxonomies and also ASEAN taxonomies, which is a positive trend towards more harmonization of taxonomy. However, sectoral coverage still varies. Each country have its own economic structure and policy priorities, so not every taxonomies look the same. For example, more focus on the energy and other on agriculture and forestry in respective of each country's needs, the condition. And then the key feature of the ASEAN approach is its flexibility. It's not more like not top down, but more like bottom up. ASEAN models allow countries to choose between approach like principle-based approach or technical screening criteria depending on their own capacities and also readiness, which is very, very good. But it's not without challenges. In countries like Indonesia and Thailand, we found out like the taxonomy had a limited impact to the banking sector so far, which highlights the gap between policy design and also the implementation. At the same time, there is an opportunity. First is to move more towards a harmonized and integrated regional green finance framework of taxonomy, and then secondly is the flexible framework that promotes more inclusivity and also equity among ASEAN member states. And the next one, I will hand over to my colleagues here, Intan.
Okay, good morning, ladies and gentlemen. Let me introduce myself. My name is Intan. I am a researcher from Tenggara Strategics, and I'm standing here on behalf of my research team on the green finance landscape in ASEAN. So thank you, Via, for the brief explanation about the regional condition and dynamics of the green finance in the ASEAN, as well as about the ASEAN taxonomy. So now I talk about the ASEAN Green Bond Standard. So the ASEAN Green Bond Standard is a groundbreaking initiative made by ASEAN through the ASEAN Capital Market Forum, ACMF, that provides the voluntary set of rules for the issuing of green financing instrument in the region. So the purpose is to tap into the capital market for all the players in Southeast Asia, both the government and the private players. And then the ASEAN Capital Market Forum itself was made in collaboration with the global institution, International Capital Market Association, or ICMA, and it is based on the worldwide principle, which is the green bond principle. So this is why the ASEAN Green Bond Standard is widely accepted in Southeast Asia. And not only that, it is also developed into the Sustainability Linked Bond Standard recently in 2023. So there are several opportunities of the ASEAN Green Bond Standard. First of all, the ASEAN Green Bond Standard has been adopted by countries in Southeast Asia, including the Indonesia, in releasing our sovereign green bonds or green sukuk. Nowadays, it has a large base with the cumulative of $53 billion by the start of 2023. Why? Because it's easily acceptable. And why it is easily acceptable? Because it is aligned with the global standard, the GBP, but it is stricter, so it is easily to be accepted. And then also the development financial institutions such as ADB, with the program of the GSS Plus bond, they encourage the issuer, both from the private or the corporate, to adopt the ASEAN Green Bond Standard. And as a result, the new issuance already reached $3 billion in 2024. And with the new issuance of these players, it reached 13 billion US dollar, which is a very large base of the green bond issuance. And then the next part. Okay. After we talk about the regional conditions and the policy, we talk about the governance. Okay. So in terms of governance, the first thing that is important in the sustainable finance in Southeast Asia is the 4-pillar body that governs the sustainable finance in Southeast Asia. There are 4. The first one is ASEAN Capital Market Forum, which I already mentioned about. This is regarding the capital market regulation. So it consists of capital market regulators around Southeast Asia, such as the OJK, Financial Service Authority from Indonesia, Monetary Authority of Singapore, and the other Security Exchange Commission from Malaysia, Philippines, and etc. And then the second part is the ASEAN Insurance Regulator meeting. And then the third part is the Senior Level Committee for Financial Integration, it can be called as LSC. And then the fourth part is Working Committee on Capital Market Development. So the last 2 governing body has job to overseeing the financial integration as well as the green finance development in Southeast Asia. Other than the 4 bodies I have already mentioned, there are also other key institutions such as the Asian Development Bank. So the Asian Development provides financing as well as guidance, technical assistance, and any other guidance to promote in formulating policy around Southeast Asia. And the second part is Asian Infrastructure Investment Bank. So it provides support for projects in key sectors such as energy, transportation, and urban development. And the third part is International Finance Corporation. IFC is part of World Bank. So it helps to mobilize private sector financing for critical areas such as renewable energy, infrastructure, and agriculture. And then the last part, the ASEAN Taxonomy Board, which was established in 2021, which is responsible in the release of the ASEAN Taxonomy. So, and the next part is about how the Southeast Asia country in terms of the green finance. So, among 8 out of 10 ASEAN members have already announced the national goal to achieve the net zero greenhouse gas emission, except for Myanmar and Philippines. So, why the ASEAN members need to ratify the national goals aligned with the climate goals? Because it provides significant opportunities for the green economy in ASEAN. For the GDP, it is estimated that the incremental will be around $3 trillion to $5.3 trillion, While for the green investment in the ASEAN green economy, it is estimated to be around like 3.7 trillion to 6 trillion. And the job creation that is resulted from the ASEAN green economy effort will be around like 49 million and 66 million, which is a huge amount considering the potential of the green economy in Southeast Asia. And then the next part is the opportunities and the challenges regarding the governance in Southeast Asia. So there are a lot of opportunities in the governance of the Southeast Asia effort in the green finance. First of all, of course, ASEAN member has a lot of collaboration, and one of the collaboration is a collaboration between ASEAN and the Japan through the Asia GX Consortium to set up common ground for the transition finance. Although transition finance is very crucial issue that needs to be addressed, so the Japan can help Southeast Asia to increase the financing in green finance through the transition finance first, and they can also become the key supply chain partner. And then the second part is the assistance. So there are a lot of assistance from the key institution that I already mentioned. One of them is the IFC. So one of the case is in the Vietnam. IFC helps the Vietnam to release the guideline for the sustainability reporting, which is aligned with the global standard as the Global Reporting Initiative, or GRI. So this is like the widely used sustainability reporting framework. And then the other opportunities is the guidance. So several ASEAN member states has already provided guidance in reporting and assessment, which is the climate risk stress testing. So for example, like Singapore and Malaysia, they provide the climate risk stress testing guidance. And also for the sustainability report, Singapore and Malaysia also release a report, release a guidance for the adoption of IFRS S1 and S2, the recently updated accounting standard for companies to be adopted in the near future. So this is a huge opportunities for Southeast Asia because they already move forward to promote the green financing by strengthening the governance. And then the challenge, there are several challenges. First of all, regarding the ESG disclosure. So the ESG disclosure is composed through effort of various institutions, various stakeholders, not only for the governments or the regulators, but also the customer. The customer needs to give the moral pressure for the company to conduct the sustainability practice. Well, for the government, they need to have a synchronized regulation between the financial institutions and the real sector. That's why there are another challenges regarding the supply chain data. So because there is a lack of synchronization of the regulation between the real sector and financial institution, there is a lack of data regarding the ESG disclosure, such as greenhouse gas emission from the related real sector. So it can become a hurdle for banks or the other financial institution to provide green finance to the real sector because they don't really have the data. And aside from the supply chain data in the big companies, there is also a problem about the supply chain data for the micro, small, and medium enterprises. As we already know, the MSME compose around like 70% of the supply chain in Southeast Asia. There's a huge amount that needs to be addressed to increase the green finance in Southeast Asia. But since they lack of capability and they have like low market capitalization or maybe well established, they need a guidance from the regulators so they can follow the template and the guidance made by governments to increase their possibility and tap into the green finance market. And then the third part is the interoperability. So in Southeast Asia, there are a lot of standards that is currently being adopted for the sustainability reporting, such as the GRI, which I already mentioned before, the Global Reporting Initiative. The second part is the TCFD. TCFD is the Task Force on Climate-Related Disclosure. It is from the Financial Stability Board, FSB, from the Basel in Swiss. And then the third part is the International Financing Reporting Standard by ISSB. As we already know, like a lot of companies adopt the IFRS for the reporting. So because there are a lot of standards, it is very difficult to compare between companies even in the same sector. So there needs to be like interoperability of standards, whether through guideline or to the regulation. And then the fifth part is the expertise. Because there are a lot of expertise in sustainable finance nowadays across Southeast Asia. But for smaller banks, maybe in Indonesia with the capital below 5 trillion rupiah, and the rural banks, it is quite hard to tap into green finance market due to lack of expertise in sustainability reporting, which can hinder the bank's effort to provide green finance. Okay, the last part of our 4 pillars in this research is the financial instruments. So in this part of the financial instruments, I will divide into 2 parts. The first one is the green debt market, and the second part is the carbon pricing regulations. So the green debt market consists of the green bond and green loan. As you can see in the graph, there is a growing trend of the green bonds outstanding in the ASEAN, which is mostly contributed by Singapore, around 35%. Actually, Singapore contributes around like 50%, half of the sustainable debt market. So this is not surprising as Singapore becomes the financial hub in Southeast Asia. And then Indonesia becomes in the second place that contributes around 29%. And it is mostly contributed by the sovereign green bonds issued by our Ministry of Finance. And the third part is Thailand with 10% of contribution. So in order to have this growing trend, there are several initiatives conducted by these governments. So we pick up like 4 examples of the initiative. First of all, Singapore, the first corporate green bonds issuance in Southeast Asia is from Singapore, from the City Development Limited, around $100 million for their sustainability building projects. So most of the green bonds in Southeast Asia is targeted toward the green building. And Malaysia, green bond grant scheme itself provides incentive to offset the external review cost, which becomes hurdle that may increase the financing cost if it is not offset by the regulators. And then the second part, Malaysia also provide the similar incentive for the green bonds issuance. So through sustainable and responsible investment Sukuk framework, they managed to have a company, Tado Energy, to issue world's first corporate Sharia green bonds or green Sukuk, about $58 million for a solar power project. So this is a huge amount coming from Southeast Asia. And then the third part for Indonesia, Indonesia actually spearheaded the first sovereign green bond issuance in 2017 with 1.25 billion in green Sukuk issuance. Nowadays, the government also adopt the AGBS or the Asian Green Bond Standard for issuing the sovereign green Sukuk. And then for the Thailand, with the help of ADB through ACGF, ASEAN Catalytic Finance Facility, they managed to issue the first sovereign sustainability bond about $860 million to fund green infrastructure projects such as the MRT line in the Orange Line in Thailand, as well as the social recovery of COVID-19. But obviously, with the rapid development of the green debt in the Southeast Asia, there are several challenges that needs to be addressed. First of all, this is a worldwide challenge actually. First of the lack of green definition, which tends to cause the uncertainty for the issuer. And of course, it increased the risk of greenwashing as well as greenwashing. The condition where they fabricate their report as if they conduct the sustainability practice, whereas they're not. And then the second part is the non-bankability. This is especially happened in the infrastructure project. As we already know, infrastructure project has large of upfront costs and long payback period. In the renewable energy and water project in Indonesia, it also has a low capacity from the project owner as well as unreliable off-taker. This risk can increase the financing cost to raise debt from the green bonds. That's why it needs to be addressed. And then the third part is the MSME less involvement. Although MSME has very large involvement in renewable energy in Southeast Asia, their low ability and low market cap can limit their ability to absorb the loan, probably because they cannot report regarding the emission from the direct, indirect, or the value chain emission. And then the fourth part, as I already mentioned before, the additional costs regarding the monitoring, reporting, and verification for issuing the green bonds, which already been addressed by the government from the Malaysia and the Singapore, which provide incentives, so it can be adopted too in other Southeast Asia countries to tap into the green finance market. And then the fifth part is the small size of green debt market. It is actually related to the pricing of the new bonds in the primary market. So if there are a lot of green bonds, if there is a high capitalization of green bonds in the market, it can make it easier for the market to price a new bonds. So we need to increase the market for the green bonds, which can in return to increase the green bonds issuance for Southeast Asia. But of course, there are a lot of opportunity too. This is based on the case from the Indonesia and Thailand. There is an oversubscribe of the green bonds. So the investor appetite is very high in Southeast Asia, which cannot be denied. For Indonesia, there is oversubscribe of green bond, and the Thailand, which I already mentioned about the MRT project, the Public Debt Management of Thailand released a sustainability bond, and the bid reached 3 times higher, and the yield can reach below 15 years of the bond yield. So this is big news for Southeast Asia to increase the green debt market. And then the second is the renewable energy, because now Southeast Asia is concerned to increase the renewable energy project. Maybe you already know the project in Laos regarding the hydropower in the downstream of the Mekong River, or the hydropower in Indonesia in the West Java, Jatiluhur, or in the Sulawesi Island. So that's one of the opportunities for Southeast Asia. And then the third part, this is also important part about the company reputation. So when we talk about the company, if they are more concerned regarding the ESG issue, it can increase the company reputation, which can increase their acceptance in the financial market. Last, about the financial instruments, I will explain regarding the carbon pricing. So the first part of the carbon pricing I will explain is regarding the voluntary mechanism. So the voluntary mechanism, carbon mechanism, or VCM, has already been implemented by all of ASEAN member states, with the exception of Brunei Darussalam. So this is a huge opportunity for Southeast Asia, considering the potential of carbon credit that each country has. And then the second part is Indonesia is the first country that already conduct the involuntary carbon mechanism, or we call it emission trading system, the cap and trade. So it has been implemented since 2023, and then the only carbon tax policy is already implemented by Singapore since 2019, and they intend to increase the carbon price to $50 per $50 to $80 per ton in 2030. So it has been implemented well so far. And then the second part, as I already mentioned before, regarding the potential of the carbon credit, this is due to the nature of Southeast Asia that has a lot of forests, mangrove, and peatland, and of course the sea that can conduct the blue economy. Actually, the Southeast Asia country has a high share of the nature-based solution in the world. For example, like Indonesia, it is ranked in the second place with share of 15% of total nature-based projects in the worldwide, while Malaysia is in the 9th rank with a with a contribution of 3%. So this is a huge potential to utilize the nature-based solution in Southeast Asia. Not only that, for the Thailand, Myanmar, Cambodia has like around 1% of share in each country. And then the second part is if we combine all of these nature-based solution project, it is estimated to generate an annual revenue of $267 billion annually from 2025 to 2050, which can reach around like $3 trillion in 2050. So it's a huge amount for the ASEAN to utilize the nature-based solution. And then the second part is the job creation is around like 13 million, and the emission reduction is around like 1.1 gigaton carbon dioxide emission. And after I explain about the opportunities, about the carbon pricing in Southeast Asia, I will further proceed to the challenge. So the challenge is related to with the Indonesia's case, because Indonesia is the only country in Southeast Asia that already implemented the emission trading system or ETS. First of all, the challenges is the low carbon price. This is not only happening in Indonesia, but also happening in Malaysia and Thailand. Why the low carbon price is important? Because the carbon price is like a disincentive. If we talk about carrot and stick, this is like the stick for the company to conduct the actual emission reduction. If the carbon price is too low, the company can instead choose to buy the carbon credit, or the multinational company can instead offset their emission into the Southeast Asia market, which is called as carbon leakage. So this is a real issue for the Southeast Asia. And then the second part is lack of clear emission data and compliance. This is regarding the green project that is the base of the carbon market. So it needs to be improved by improving the quality of the reporting standard, the monitoring, the reporting, and the verification process. Also, in the case of Indonesia, the government already addressed this issue because previously there is only the national standard applied for the carbon market, which is the Sistem Registry Nasional. But in the next month, it can use the global standards such as FERA standard and gold standard. So it's a significant leap from our government to increase the transaction value in carbon market. And then the third part is the slower progress compared to other regions. In this case, I compare to the case of Latin America regions, because in that area, Mexico already implements the carbon market, while the other countries such as Chile, Colombia, and Paraguay already implemented the carbon tax. While in Southeast Asia, it is only Indonesia and Singapore. In the case of Indonesia itself, Indonesia has already implemented the carbon market since 2023, and it expanded into the international carbon market in the beginning of 2025. And then, as I said before, due to the challenges, the transaction value is quite low compared to the potential at $4 million, which is below $140 million of potential of the carbon market in Indonesia. So the challenge in Indonesia, it can become a lesson learned for the other Southeast Asia country, which is going to tap into the carbon market, such as Vietnam, which is going to plan to have the ETS pilot project in 2025. So thank you. I will return the mic to my colleagues, Via.
So yeah, just to wrap things up quickly in respect of the time, we have created several recommendations, actually 10 key recommendations to promote green financing in Southeast Asia. First is to strengthen the governance of green finance in ASEAN and also its member states. First is a horizontal policy coherence, helps align green finance strategies across ASEAN institutions and also platforms that we have discussed. And secondly is a vertical coherence, ensure strong coordination between regional bodies and also national authorities, allowing like policies are inclusive and adapted to the national level. And secondly is the integration of transition finance in the bridge to green finance. Transition finance is critical to enable emission reduction while maintaining economic sustainability. And in order to be effective, it must be guided by transparent transition plans and also clear sectoral pathways to avoid both greenwashing and what's often called transition trap itself. And thirdly, to improve interoperability of green finance frameworks. For example, national systems should be aligned with the ASEAN taxonomy that we have discussed. And this harmonization can enhance investor confidence, improve comparability, and also facilitate more cross-border green finance flow. Fourth is to strengthen market infrastructure and transparency. By developing robust market infrastructure and promoting transparency, this is a crucial step to improve green financing in the region. By, for example, adopting international disclosure frameworks and also sustainability reporting as a strategic business tool to be adapted in the corporate level. And then the fifth is to standardize sustainability disclosure frameworks, which is a need to harmonize the disclosures while making them more inclusive and also scalable. For example, we know that in Southeast Asia, there are a lot of small and medium-sized projects, so it needs to be more inclusive to smaller projects. And then next is to better integrate climate-related risk into financial institutions. For example, it could be supported through data sharing mechanism, especially requiring standardized disclosures from large entities, and then the use of capital buffers as a macroprudential safeguard against systemic risk posed by climate change. And seventh is to enhance the use of innovative financing mechanism, as previously discussed too, about blended finance, for example. That kind of models, I think it needs to be more explored in the Southeast Asia. And then to advance carbon markets and pricing mechanism in Southeast Asia, a strong legal and regulatory foundation is also necessary, and then institutional capacity building and standardized MRV frameworks to ensure transparency and more environmental integrity of the credit itself. And then expand the green debt market and align with the sustainable supply chain. First, to establish clear, for example, clear energy transition pathways to guide the investment, and then to enforce environmental standards across the supply chain and incentivize more green bond issuance by offsetting additional compliance and also verification cost. And lastly is to enhance regional collaboration to improve market scale and efficiency. With stronger regional coordination needed to align a lot of initiatives, for example, taxonomies, carbon pricing, disclosure frameworks in ASEAN. And ASEAN platform can also be leveraged to enable joint green investment vehicles that can pool capital and also resources for a larger and more high impact projects. Actually, that's all. Thank you so much for your attention, and I hope this will give you a clear clear landscape and picture of ASEAN green financing, of where we are right now in ASEAN or every ASEAN member states in its green finance journey. And I hope it can also give you a hint on how we can actually move forward. I'll pass on the mic to my colleague Cynthia. The floor is yours.
Thank you so much, Fia and Intan, for the presentation. Now, on to the next session. Can we invite Pak Donny Donosepoetro, Dr. Majun, and Pak Jiro Tominaga and Ms. Yulanda Chung up to the stage, and I will let Pak Yose Rizal Damuri, our Executive Director here at CSIS, to introduce the panelists. If the panelists would like to go on stage, and I will have a photo session for all the panelists before we begin. Sorry, Dr. Majun and Pak Donny and Pak Jiro. Sorry, if you guys could.
Okay, very good morning to you all. It's really a pleasure to welcome you to CSIS and also to our events, research disseminations of charting ASEAN green finance, the trends, and also the discussions, panel discussions on the research report as well as the insight from the current situations. Well, I think we've heard a lot about green finance throughout the day, and our team, the CSIS team, supported by Tenggara Strategics, also already produced this report on green finance. There are many issues and challenges actually have been discussed in this report. Research report, and I invite all of you to read and also to perhaps after this to discuss about the green financing landscape in Southeast Asia, in ASEAN. I believe these regions really require stronger green financing initiative. Especially considering that the regions is one of the most dynamic regions. We can call one Southeast Asia as well as the other regions in this part of the world is the most dynamic regions, and it requires a lot of developments, a lot of energy. I read in one of the research, one of the publications, that the demand for energy in these regions will increase around 40% by 2030 in order to cater the demands and the developments in these regions, and considering that currently 80% of the energy still come from the fossil fuels, green transitions is a big challenge, to say the least, to these regions. In order to tackle the issue, we need a lot of resources. We need a lot of financing. And green financing should be one of the, not only one of the, but the main important elements of the developments. That's why it is really good. We come up with this initiative when we start the Green Investment Principles ASEAN chapters last year. Actually, we didn't really see how big the problems is in East Asia. Where apparently when we also try to write this report around 4 or 5 months ago, we didn't really see that the problems and the challenge is very complex. The challenge that our team, the team already described to you. So in these panel discussions, we would like to go deeper. We would like to look at on those challenges and also try to find some solutions, some insight on how we tackle and how we deal with those issues and challenges. Southeast Asia, ASEAN member countries is are diverse, very diverse. We do have very advanced country like Singapore. We have less developing ones like Indonesia and Thailand. We also have less developed countries, less developed economies with very different situations. This is actually one of the advantages and one of the benefit of having diversity in these regions. But it also poses a big challenge to us. And because as we've seen from the report and from the presentations before, the heterogeneity of policy and regulatory framework is quite significant. Diversity is good, but too much heterogeneity might be also confusing, especially when we're dealing with the financing. So how to give more standardized, as Dr. Majun also mentions in his opening, how to make more harmonized regulatory framework in these regions might be also one of the key issues that we can discuss. And we are quite fortunate today. We have a very solid, very knowledgeable panelists in our panel discussions on the situations of green finance in Southeast Asia, in ASEAN, as well as green financing in many other regions. We do have today Bapak Donny Donosepoetro, the co-chair of GIP ASEAN chapter. Thank you very much, Pak Donny. Pak Donny actually own the events here because the host of our events today. Pak Donny is also the cluster CEO of Indonesia and ASEAN Market Standard Charter. Yeah. Thank you very much, Pak Donny, for joining us. We also have Dr. Majun, the founder and president Institute of Finance and Sustainability, as well as the chair of GIP, Green Investment Principles. Thank you very much, Dr. Ma, who come all the way. I don't know from where. You might because you are everywhere. The third speaker, Mr. Jiro Tominaga, Tominaga-san, the country director for Indonesia Asian Development Bank. Thank you very much, Tominaga-san. You always support CSIS activities very generously. And last but not least is Miss Yulanda Chung, the head of Southeast Asia of RELP. Perhaps you can also say a little bit something about RELP in your introductions letter or your introduction. Yep. So without further ado, I would like to start the discussions by asking, by inviting Pak Donny. Maybe you have some insights or some perspective on how to deal with the challenge to improve the green finance in Southeast Asia, both at the individual level countries or at regional levels within or under ASEAN framework. Especially considering that the GIP also produced this report. You might also share a little bit of something. Please, Pak.
Thank you, Pak Jose, and really great to be here. And thank you to all of you who have gathered and attended this session with us here, and of course, Dr. Ma and other speakers as well as you for joining. By the way, first of all, Pak Jose, if I may comment and add to what Pak Jose has mentioned, as Ibu Mari highlighted this morning. This report is something kudos to our colleagues in Tenggara, and I think the overview of the report by Via and Intan have been really very splendid. This is one of the reports that we have seen quite a number of reports across Southeast Asia. As Tominaga-san knows very well, I mean, whether that's your consultancy types of reports, whether that's any financial institutions, you've seen all of that. I must say, actually, this report, not because this is our report, but basically this has, as you can see from the presentation and the overview, that it's one of the most clear in terms of mapping the landscape, the complexity, the opportunities, the challenges. And actually, very clear recommendation, which I'll highlight a little bit about how to overcome the challenge and how do we accelerate green financing to help ASEAN markets achieve or progress towards the pathway to net zero. So for those of you actually who haven't seen the report or read the report, please do so. Actually, this is a great report and hopefully can help all of us to corral and create actually this whole coalition, whether that's the public sector side, the multilaterals, the private sector, both financials and companies, to embrace this because, to be quite honest, to your question, Pa Jose, I believe that there is no silver bullet. I mean, there are a lot of challenges, but there is no one silver bullet, but there are a number of steps that we believe that if we collaborate together, we can progress in a whole lot better way. So if you look at the challenges, some of the things actually that the report has highlighted. So there's a need. Right now, the financing is nowhere near enough. We need about 1.5 trillion in ASEAN to help the countries by 2030 in cumulative terms, to help the countries in ASEAN to meet their NDCs. The other way actually that we have seen, as the report has highlighted, is that there are three persistent bottlenecks from a financing perspective: a lack of bankable projects, inadequate financing instruments, and fragmented regulatory environments. So let me touch upon one first. Actually, the lack of bankable projects. Some may think actually that there are a lot of projects that needs to be financed, but right now, the bankability becomes an issue because I think, as highlighted earlier on by many of the speakers, including by Ibu Mari and Dr. Majun, that there's a lot of appetite to finance. Many of us here in the room who are from financial institutions, I'm sure we are on the shortage on our KPI for green finance. So meaning that we need to do a whole lot more. And sometimes it's very difficult to find, okay, how do we find the right projects for us to finance? I mean, mine included. But if you look at the bankability, the issue, the pipeline remains very thin. And this is the research in the publication that we just did actually confirms a couple of recurring issues. One is that green projects often lack the scalable business models. The second part is standardized metrics. And the third one, strong offtake structures, because again, the nature is this is a frontier field, if you will, right? I mean, many of them actually would require a strong off-taking agreements, whether by a public sector state-owned enterprises like in Indonesia, in Vietnam, or a market like even in Singapore, because it's not like in Indonesia or Vietnam. Actually, there's EMA, Energy Market Authorities, actually, but it's a different sort of off-taking. But off-take is always actually a key consideration here. Now, a couple of things that the report has suggested. As you've seen earlier, we believe that the solution must be system level. So it's across the board, right? We need alignment across policy so that policy coherence, alignment, and policy harmonization between, so that vertical, horizontal, I think that's a very good way actually to highlight it. There's a number of quite initiatives actually within that. And that policy relates to taxonomies, but I would also add, relates to, particularly right now, as we are in this whole time, I know Bu Mari is spearheading actually that discussion, if you will, in the US. It's also the sort of if you call it actually non-tariff barrier, right? Actually, but in this case, we know that projects in some countries would require local content requirement on renewable energy. Whether that local content requirement commensurate with the actual domestic industry capacity, that's the issue. The issue is not about local content requirement per se. Many countries actually would probably actually reserve the rights as an emerging market to have that local content requirement, but Indonesia has done, as an example, closer to home, alignment on that renewable energy local content requirement. The other thing is about the JV structure between the state-owned enterprises that covers the electricity, whether it's the Vietnam sort of EVN, for example, which is the equivalent of PLN in Indonesia, with the private sector, project developers. So that equity stake of majority, not majority, operating mechanism, these are the types of things that needs to be harmonized across the ASEAN market. So it's not just adopting taxonomy, but also this so-called non-tariff kind of non-taxonomy related sort of aspects of it. Now, the other thing very quickly actually is just to add, ASEAN must really ensure that they capitalize and use on the different very useful platforms such that we have ACGF. Tominaga, I'm sure actually as the ADB is one of the major proponent of the ACGF. Actually, we have the ASEAN strategy for carbon neutrality. We have the ASEAN Carbon Center of Excellence. The JETP, if you will, by the way, next week we will be doing the first signing of JETP for Indonesia. So it's Indonesia and Vietnam. A lot of criticism about JETP hasn't really dispersed the money. So next week, under with Pak Erlangga, yeah, we're going to announce the closing of one Saguling. This is in the Indonesia 1, 60 megawatt blended finance between DEG, Propaco, and as it happens, Standard Chartered, actually the private sector side. But this hopefully actually would open the floodgate, and this is just one of the many. But these are the platforms that would be really very relevant because it brings all of the people together. When we talk about the report highlighted, the other issue about inadequate financing mechanism. To be quite honest, as a financier, we believe that we haven't done enough. There isn't yet actually a very advanced, innovative, blended finance that can help the project to become bankable. So it's actually all sides. When you look at de-risking mechanism and structure, I know I won't bore you with the details on the financing structure, whether that's senior cover actually or first loss guarantees, those types of things. So it's not as simple as blended means that Tominaga-san's ADB and perhaps Standard Chartered or other banks actually just putting in actually 50-50 on a $1 billion project. One with concessional, the other one a private or commercial. That's not as simple as that. But the idea is that every single dollar of public sector money or the multilateral development bank's money would have to attract more than 1-to-1 ratio of the private sector money. And that is actually something that we are still in the process of trying to refine further. What kind of de-risking criteria, what kind of credit enhancement sort of structure that actually can. So that's actually one of the things that's highlighted. Last but not least, I wanted to add that it is a time that blended finance would have to be combined with carbon pricing. And that is a very important part. Blended finance alone is not enough. The carbon pricing, whether it's transition credit, for example, for early retirement of carbon-based or coal-fired power plants, together with the financing side, is really a must. And this is high time actually for us to do it. Thank you.
Thank you very much, Pak Donny. It's interesting that you look at policy coherence. It's not only about policy and regulatory framework harmonizations on the finance sector, financial sectors only, but also in the broader, bigger framework, even such as the industrial policy or a trade policy, as well as many other policy. I think we need to go deeper on that issue, because sometimes the challenge of the green financing or a green project, even talking about bankability, do not only come from the financial sector itself, but rather from the broader policy perspective, broader policy arrangements. We're going to go deeper after this. But I'd like to go to move to Dr. Majun, actually, listening to our research and also our findings, and perhaps you also already had a chance to look at the report. Maybe you can share the experience from other regions. I know that GIP has several other regions, not only in ASEAN here. Maybe you can share the experience from other regions on how to promote green financing and green investments. Or perhaps you can also share a little bit about the Chinese experience as well. Please.
Yeah. Well, thank you very much. And maybe I'll just react to a couple of comments you and Pak Donny has mentioned, you made a point that this ASEAN region is very dynamic in terms of increase of energy demand and so on. I've been giving this number in the past few seminars regarding ASEAN-China sort of a comparison. The Chinese fertility rate, namely one family in China, now has only 0.7 baby. Yeah. And in many of ASEAN countries, I think in Indonesia included, they're having 3 babies. So with your population, I think the next generation, the young guys are going to be 4 times compared with the same sort of the base from the Chinese, which means that you have a massive growth on everything, right? You have the babies grown up and they need housing, and the housing will need steel and cement, and the housing will be powered by electricity, and they need water. So everything needs to be built. And the pace of that building is going to be 4 times faster than in China in the coming 10, 20, 30 years. And that's where the demand is. And we need to make sure that all these new activities, new constructions, are as green, as sustainable as possible, which means that employing renewable energy, green technology for everything. And that's why the chance for you to actually finance these activities is actually much bigger than in China. Even though the Chinese green finance market is huge, we now have green loans, 37 trillion RMB in China, and green bonds, 2-point-something trillion. Combined, is a total outstanding green debt market in China. That's a $6 trillion outstanding now, right? Which we actually financed the massive growth of green economy. For example, Chinese renewable capacity is now 50% of global total. Our electric vehicles is 60% of global total. Our battery is 70% of global total. It's all financed by money. And it's relatively cheaper money arranged in the financial system with taxonomy, with disclosure, with the central bank guiding, with incentives, crowding out some private sector money. So I think the age for green finance explosion is actually coming to ASEAN now. After China had this massive growth in green finance. Of course, we need to tackle the bottlenecks that's been mentioned here and there. For example, lack of a bankable project. Now, let me give you 2 examples why I think the key is not so much within finance. The key is in project design. And you need to make sure the projects actually do have cash flow. So the banks will be willing to finance them and get the money back, right? And one example is that in Inner Mongolia, the group of people, they want to grow grass on the desert, which is obviously a green project, right? It's an eco-restoration. But growing grass makes no money, right? It just looks nice. And how can you make money at the same time, covering grass on top of the desert? They actually invented 3 work streams, 3 cash flows. One is that they put solar panel on top of the grass. Then the solar panel can sell power, right? And secondly, they raise chicken underneath the solar panel on the grass, right? They can sell chicken meat. And thirdly, they grow the Chinese herbs, which is very expensive, very high valued Chinese herbs, medicines. So with 3 income streams on the same project, which has no cash flow to start with, it becomes a very profitable business, yeah? So it's not a banker that can think about these things. We need to really bring the sort of industrial experts, very smart design guys, right? And maybe financed by some external money, TA and so on, philanthropies. The other example, I actually gave to Yulanda yesterday. I said I took a delegation to Timor-Leste a couple of months ago, and they want me to think about how to use a sort of a green tourism to boost the economy. And after 4 days of study, I brought like 11 experts, green tourism, building, energy, and so on. We came up with a solution, which is let's bring 1 million Chinese tourists to the country. And it's going to grow the economy by 100%. It's a small island, 1 million people. Because these tourists will be utilizing all the infrastructure projects, right? Airports, cruise terminal, hotel, and everything. Then if you build the infrastructure for tourism, then these tourism projects will be money-making because we have bring the Chinese tourists coming. And the 1 million Chinese tourists is 1% of the Chinese outbound tourism, which is relatively easy for us to arrange. And we said we have 3 reasons why 1 million Chinese will come. Number 1, you give us a visa-free. Right? If you reduce a $35 visa fee, then a lot of Chinese will come. Secondly, you build a direct flights between Beijing and East Timor. Last year, I took flights from Beijing to Timor 25 hours because I had to stop in Xiamen and to Bali and overnight and then fly to Timor. Now it's 5 hours. They built a direct flight end of last year. And thirdly, we put the Timor into the official destination of Chinese Tourism Ministry, which will make the tourism agencies legally operating travel package for Chinese tourists. So that's a project design. Again, it's not finance, but with the people flowing, then the project become bankable, then the bank can really begin to react by offering the small finance package. That's one idea on bankability. The other idea is that at this moment, to look for cheaper financing, which is already available somewhere. It's not the US dollar financing. The inflation is high and dollar funding is costly. In fact, the Chinese money is now cheaper. In terms of base rate, the policy rate is 300 basis points lower than the US dollar rates. And China has been actually attracting a lot of panda bond issuers in the Chinese bond market, meaning foreigners issuing green bonds in the Chinese domestic market. Or you can issue Stinson bond, which is the offshore Chinese RMB market that's available in actually Singapore as well, in Hong Kong, in London. And even after hedging for currency risk, the funding cost is lower than your local currency and then US dollar funding. So these are opportunities I think you can think about in really planning your projects in ASEAN countries.
Thank you, Dr. Ma. I think your highlights on how to have a good project designs and how it can means more bankability to the project. I think that is a really good take on the issues that have been, I believe, have been have become one of the biggest issue in the green financing. So now I think that's also related to the last remarks from Pak Donny on blended finance and how to make this blended finance actually can make also the bankability of the project improve. And now I'd like to ask, or I'd like to move to Mr. Tominaga-san, Tominaga-san, on what is the rules of multilateral development bank? I believe this is also related to the blended finance that Pak Donny also mentioned previously. Maybe a multilateral development bank can also contribute to that, to the blended finance, as well as the how to make the first pace of the project. The design of the project can be more bankability, can be more accepted by the market. Do you have any?
Thank you. Thank you very much. Thank you. First of all, thank you very much for inviting me. I think this topic of green financing is really timely now, because there are a lot of discussion going on about, globally, about whether this green or climate type of issue was still going to catch the imagination of the people around. So I think it's very nice that we can get together here to talk about the different things. Now, I think you mentioned about blended finance. Yeah. I think this is the area, I believe, that one of the advantages that organizations like us has, because we have access to a concessional financing, some of the programs, donor-funded programs, whether it's Australia, Canada, Germany, or the international multilateral sort of program like Climate Investment Fund, etc. So I think we do have a good sort of access to this thing and then blend it in the financial structuring. And then also we have the system and the mechanism and then people to handle this. You may know that there is a MDB's, Multilateral Development Bank's common principle of how to operate the blended finance principles, which basically to try to avoid the organization like us bringing in with the blended finance and crowd out the private financing, right? So to keep the sort of the low pricing, so that private institutions cannot come in type of situation. To avoid that situation, we have the certain criteria that we have to go through before we structure the deal in a blended finance. And also, I think also we have expertise and experience in coming up with the technical design. You mentioned about sort of the upfront, the upstream sort of project design issue. Dr. Yu also mentioned about that, which is very good, very important. So we have, based on experience across the region about looking at this very similar type of transactions, we can bring in some expertise and then also the knowledge of the policy field in that particular country to de-risk. But I think that is very important, and we should all do that, and that's also one of the strengths, as I mentioned, in an organization like us. But at the same time, that is the de-risking at the transaction base. Yeah. So this is kind of financial sort of structuring, a lot of imagination, and then bring in the structure, and then senior, and then So that's great. But I think at the same time, I think I agree with you very, very much, Donny, that it is the framework, that's the overall bigger picture of the thing. I think this is basically the policy framework and regulatory framework that really, I'm coming from the public sector financial type of person, so I'm kind of learning through experience with the good teacher like Donny, exposing me into the real kind of transaction and structuring type of situation. I think one of the risks is that the investor seems to have, and which is very difficult, is, one of the things that they need to do is to identify the risk and define the risk so that they can figure out the way to address the risk. Because the risk's always there. I mean, you cannot avoid that. The question is, and then also the private sector people are very, very innovative in coming up with a different way to mitigate the risk. Certain risks, they decide it's just not going to be, cannot be covered that, but we might take a risk because this, the maximum sort of damage we're going to have is this much. But I think the most problematic situation is that when there is uncertainty in the policy and regulatory framework that does not allow investors to really define what the risks are and then give you the predictability of what is going to happen, right? So that could paralyze investors' decision, basically, that they cannot decide whether to go or not because they just cannot define what the risks are, so that they cannot come up with a way to mitigate the risk. So in that sense, I really think the policy and regulatory framework, and that is also the area that organizations like us can maybe able to help in the policy dialogue with the government and etc., and then also engaging with the body like ASEAN Capital Market Forum, which we are doing, and the taxonomy board, etc. So that's another area that we can kind of contribute to the de-risking for the green financing in general.
On that issue, if I may follow up a little bit, what kind of risks that you think is the most pressing risks to regions at the moment?
Well, I don't know. Maybe I think these people directly in the market will probably be able to come up. But I do think it's a certain uncertainty that is there in the market about what kind of and then it's a standard issue as well, that to really understand and define the size and scope of the risk, I think that is. Of course, bankability issue is very, very important, but it's a transaction-based bankability. It's always there. I mean, it's in each transaction would have that problem, right? So and then also the infrastructure for the carbon market, carbon pricing. If that kind of thing is available, I think that would be very, very helpful in order to really getting assured sort of predictability in the cash flow right, of the transaction.
Okay, thank you very much. So we will get back to that point later on, but let me move to Miss Yulanda Chung. What do you see, or what is your takes on the research finding that this report already delivered? Do you agree with that findings, and also perhaps perhaps you can also look at how we could effectively deal with those challenges, especially on the issue of disclosure and transparency issues. Perhaps you have some kind of perspective on that issue as well.
Sure. Well, thank you very much for inviting me here to the organizers. And I think I'm here in both my previous capacity. I used to work at Standard Chartered in London and then for DBS in Singapore looking after sustainable finance, but also in my current capacity to represent an organization called RELP, RELP. So it is a very new organization. We are a very technical consultancy specialized in helping emerging markets governments in designing renewable energy policies, especially in procurement solutions. So where the countries want to have renewable energy auctions, how to run the evaluation of the bids, how to ensure that the terms in the auction, whether certain local content should be included, at what threshold would improve the bankability of renewable energy projects. So I think for RELP, we would like to go even more upstream. So we talk about harmonized standards, better disclosure and transparency, all those things that matter at this level and is very well articulated in the report. Then it comes higher to the project design that Pak Donny talked about. What is the allocation of risk? Can we improve the risk mitigation and assign that mitigation responsibility to the right party? And what RELP is trying to do is to go to another tier upstream to say it's not just about standards, it's not just about project design, it's about policy design, because then we are talking about really systemic change. And in thinking about climate change as an issue, we are really talking about electrification, and we want that electrification to be green. So at the moment, RELP is operating in Africa. We are working in South Africa and Togo. We are working in Caribbean. We are working with the Barbados government. And we are hoping to replicate that in Southeast Asia, hoping to work with the likes of the ADBs and AIIB, the multilateral development banks, very present in the region to replicate the success that we've had. A little bit more about RELP, because it links to some of the report findings. RELP was born out of a very successful renewable energy program in Argentina, of all places. A very difficult market to attract foreign direct investment. But back in 2016, Argentina embarked on a program called Renova. And in 5 years' time, managed to run several rounds of renewable energy auctions that increased the renewable energy installed capacity by almost 80% in 5 years' time. And also attracted almost $9 billion of FDI into a market that really the currency risk is through the roof. So RELP was started by a group of former Argentinian government officials, seeing that if they could do it in Argentina, of all places, surely that example can be done in other emerging markets that are experiencing similar macroeconomic challenges. And I think Southeast Asia is really quite ripe for that. And we also are backed by a guarantee platform. So similar to what ADB has, they have an affiliation with CGIF, providing guarantee solutions to crowd in private sector money, to have the multiplier effect that Pak Donny talked about is not $1 attracting $1 private capital, it should be $1 attracting $5, that sort of multiplication. So RELP has a guarantee platform. We are launching a guarantee fund in Luxembourg later this year that we are also hoping to deploy in Southeast Asia when we see emerging markets, governments having that ambition to go maybe leapfrog in their renewable energy journey. And that guarantee fund is structured in a way that, again, is very much tied to the report findings about systemic change. It is programmatic, meaning that, for example, if Togo, a government that we're working with now in Africa, is running renewable energy auctions, the guarantee is in place before the auction results are announced. And the auction winners, whoever has bid for the capacity, would be given the guarantee. And by doing it, by structuring it so early in that transaction cycle, the project developers are able to price in going to the banks, okay, what is the cost of capital if I were to win this bid? Because it's a very capital intensive business. And that programmatic structuring of the guarantee earlier on in the transaction cycle has enabled Barbados, Togo, South Africa, Argentina, this is where the story started, to be very successful. So I really feel that today's report, when it comes to about green finance, in order to scale green finance, we need good standards. And the interoperability across markets, we also want to see in renewable energy policies, because we believe that the auction design, the procurement framework, whether it is for generation, whether it is for storage, whether it is for grid improvement, we are talking about the ASEAN power grid. We want that interoperability there as well.
Well, let me go deeper a little bit on interoperability. How do you see that interoperability can be improved using the ASEAN framework or ASEAN mechanisms for the Southeast Asia region?
So perhaps I can now change my hat and, speaking a little bit more about my previous capacity looking after sustainable finance in a commercial bank. For a bank, like Standard Chartered, operating in multiple markets, when you have multiple taxonomies and your project is started by a sponsor, say based in Singapore, but the asset is in Indonesia, and you have a JV partner that is from the Philippines. So immediately, you've got three potential jurisdictional taxonomies in play. And I think the credibility will come when you can demonstrate that you are sticking to the highest standard. But in reality, when you go through a financial transaction, very often you try to find the least difficult path forward. So we need harmonization when it comes to taxonomies. We need harmonization when it comes to green bond standard, which I think is a lot more interoperable now across countries in ASEAN. And with that comes credibility. And credibility would give you bankability.
Let me move to Tominaga-san's again. Still on the interoperability, how do you see that ASEAN mechanism so far can deal with this interoperability or improve it? Is there any good initiative already ongoing, or perhaps not from ASEAN's, but under ADB project, for example, or under ADB initiative?
Well, I think the ASEAN really does provide a high potential kind of a platform that people can gather around and then discuss. It is a very consensus-based kind of forum. It's very kind of good at discussing out and then try to sort of to minimize the differences. So it is true, but at the same time, it does take some time to come to the conclusion.
Asian way.
Asian way. But it's good. I mean, because it is a complex issue. So I mean, it does need some. And I think taxonomy, the efforts that is taking place, I think that is interesting. And then I think something that we have been supporting, and then also hope to be able to sort of adopt it, and then kind of have an influence on the financial market in general. But I think those, if we talk about interoperability, it just have to get to be the multilateralism, right? So I think from that point of view, ASEAN already has the kind of infrastructure and platform for different countries to come in, and it's a convening power. So I think it does have a high potential, and we would like to see it grow.
Thank you. Dr. Ma, when we're talking about green finance, normally what we have is the energy issues, and normally green financing is devoted to a renewable energy project, for example. But one of the highlights of the report is also perhaps to pay more attention on the nature-based activities, or nature-based what you call this project, perhaps I can say. How do you see it? How we can try to expand this green finance not beyond the energy projects, or to fulfill energy demands? Yeah.
Right. In fact, if I again take the Chinese example, back 10 years ago when we started the green financial policy framework, we were actually mainly focused on pollution control. At that time, if you were in Beijing 10 years ago, the air pollution was very, very bad. And we need a lot of money to fix air quality, to fix water pollution, to fix land contamination. That's what we kicked off. And it's very easy to convince the boss, because they see in the public opinion, everybody's complaining, everybody wearing masks. So we kicked off with green finance without so much of other things, right? It's mainly pollution control. But 6-7 years later, I think roughly 4 years ago, when the government declared carbon neutrality as the main green development goal, and we quickly moved towards the decarbonization being the key objective for green finance. So now it's about 67% Chinese green loans and green bonds that are financing low carbon projects, or decarbonization projects. And the pollution thing goes down. Partly because air quality has improved 70% already in the last 10 years, with a very great success in fixing these earlier problems. And now we are facing the problem of further diversifying into other areas of sort of sustainable activities, including nature-based solutions, which we call nature financing, and also some adaptation projects. These are new areas, but very difficult areas. Why? Because most of these projects initially proposed are not bankable. Most of the nature projects, as I said, you grow grass on the desert, right? And also the adaptation projects, you put a big dam, try to block the coastal area for against the risk from sea level increase, no revenue. So I think to deal with the financing issue of nature-based solution adaptation projects, the first thing to do is to design a project that's bankable, meaning that you combine the nature elements with other projects which are cash generating. And the other projects may not be nature, and they may not be adaptation, but they're not harming the nature, right? And you have to bring these elements into the project and become a portfolio of projects, and give the portfolio to a bank, to a set of investors, and on aggregate, these projects will be bankable. That's one important thing. Now, of course, we have to do many things to help them to improve their bankability. For example, reducing funding costs, government subsidies, provide long-term financing to them, and providing TA on project design and so on and so forth. But one particular important instrument to help them enhancing bankability is the carbon markets. For example, China actually used to have a voluntary carbon markets which was stopped for some operational reason back a few years ago. At that time, we have 200 methodologies. And now after we restart, we have 6 and we're going to improve, enhance the number methodology. If we get to 200 methodologies, which means that 200 kinds of activities that can reduce carbon, reducing methane, that can generate revenue from the carbon market. And many of them may have also a co-benefit, which is helping nature. So those with co-benefits can sell their carbon credit at a higher price than the normal carbon credits, which is essentially providing a subsidy for these nature-related projects. So we have to explore many avenues, including this.
Still on the same issues, I want to get the perspective of the financiers or bankers here on the nature-based solutions or projects and how it can be more bankable, more interesting, attractive to the financial institution.
Thank you, Pak Yose. I think the key thing for many of the financiers is that if you have very high double-digit IRRs, I mean, that I think actually would be something that we would all finance. But anyway, jokes aside, just a few things actually to comment. I think Tominaga-san has been quite modest and humble, but ADB is really one of the main catalysts of sustainable or green finance in Southeast Asia, to be quite honest. I mean, the whole entire, we talk about blended finance, we talk about public-private partnership. I mean, ADB has been in all of the different fronts of that, actually across, you know, not just simple, actually sort of green power generation, but also early retirement carbon market and many others actually across the board. So really actually leading the way on that, because us, the private capital side of things, actually can't really move on any blended or any PPPs actually without the likes of MDBs, and ADB has been really taking the forefront. From that perspective, I'll say to your question, I think to make a project more bankable, I think Dr. Ma's suggestion is really very entrepreneurial. To your point, it's not actually up to the bankers or the financiers, it's more to the project developers to find other revenue stream. And they may not necessarily be climate adaptive or in particular sort of specific on carbon absorption, but something actually that doesn't harm the environment, but it creates another source of revenue. I think this is very important to call out actually a few of the risks. So here's the thing. There are projects which quite often actually not bankable because the identification of the risk, I think as you highlighted, is actually not quite there. And it has to be called out because there are mitigants to that. So there are financing structures that can act as a mitigant. Whether that is the biggest one, political risk. I think Yulanda talked about Togo, about some of the African markets, for example. As a bank, Standard Chartered is the largest international bank across Africa. We can do multi-years, you know, long-term, very heavy capex on infrastructure in Botswana, Zambia, you know, Angolas, and all of the others. I mean, sub-investment great countries. But the point is that if you talk about political risk, there is a mitigant for that, right? If you talk about credit risk, there are some structures that can help to mitigate and alleviate actually some of that risk, whether that's, you know, from an insurance side of things, whether that's because of the de-risking mechanisms and so on and so forth. Then there's the pricing or currency risk. That has to be highlighted quite well. So this in addition to getting revenue streams from what Dr. Ma mentioned. Now, I just wanted to call out actually one particular part, perhaps because the report, I think, really highlighted this in a very big way. It's about the carbon market. I think the potential for Asia, as I think Via has highlighted, 1 trillion to 3 trillion by 2050. That's between now, 2025, 2050. That is so true. I think overall, Southeast Asia, NBS potential is a total of 30%. Yes, Indonesia 15%, but the rest. It's not just Malaysia, but Cambodia and others. Look at the coastal areas, you know, seaweed projects, for example. I mean, it's something that we're piloting now for the FFD4 in Seville. This is the UN sort of showcasing of global sustainable investment development. All of this actually would help actually if we can create a methodology that would be accepted to get a revenue stream from the carbon units that is being issued out of these projects. So the normal voluntary carbon market side is definitely one big potential that can just be unlocked that opening the floodgate. And I'm very pleased to say that if you see that slide, Indonesia has 15% of all global potential of the NBS. We are working very closely with Indonesia's new administration led by the Special Envoy Pak Asim and Ibu Mari to reform the current Indonesia's regulatory framework for voluntary carbon market to unlock all of that potential, particularly on the voluntary side. Who are the buyers on the voluntary? That's all the global companies who have committed to net zero. So this is separate from the NDC and the compliance market side. Now, on the 9th of May, we are collaborating, and this is part of that whole PPP, working with Indonesian government, UK government, with us in Standard Chartered, and British Chambers to bring global carbon market buyers to Jakarta. We will have a high-level meeting with all the ministers, relevant ministers, bring actually directly all the global carbon market buyers to Jakarta so that they can tell all the key stakeholders the size of the price. Is it real or not? This whole 1 trillion that we talked about, these are all the buyers, the actual people who are actually giving the money. Your Aksas of the world, Unilevers of the world, the Amazons and BAs and all of the others. Now, then they would want to know. They would want to tell actually what kind of credits actually that they would want out of Indonesia, the high integrity, following the ICBCM core carbon principles and so on. And last but not least, what kind of regulation that would be conducive to support that. So these are the ways actually that we can make a project bankable, because once we have that, unlock that potential, again, as mentioned earlier, it's about marrying between blended finance with the carbon markets. Indonesia can get a whole lot more additional value in terms of increasing bankability of any projects if you do this.
Yeah. Including also the nature-based solutions or many other.
Precisely.
Yeah.
And the report, I think this is great to highlight that strong potential, because it's a real potential.
Yeah, yes. Thank you for highlighting the importance of a carbon market in ASEAN countries, especially in Indonesia here, since we do have big potentials on it, and also to finance other projects here, green financings, to support green financings in Indonesia. Would you like to have to give more perspective on it, or also Ms. Cheung?
Sure. So I think we talked about financial instruments in the report, and some of the very commonly used financial instruments that are under the banner of green finance includes the sustainability-linked instruments, whether it is a loan, whether it is bond. And I think there is a lot of scope for sovereigns, for countries, when they issue sovereign bonds, to think about using the sustainability-linked format, whether it is linked to policy changes for renewable energy scaling up, whether it is linked to forestry cover. Indonesia is in discussion on, retaining the primary forest cover, and that could become the threshold to hit to lower the yield that the bond issuance would pay out. We talk a lot about bankability, but I think actually this concept of bankability is a little bit tautological, in the sense that actually all projects in theory could be bankable. It's a matter of price, So when we say projects are not bankable, what we're really saying is it is so high risk, I have to charge you such a high interest rate that I know no one would take it. Now, moving on from the concept of bankability to price is very important for nature-based projects, because I think a lot of them, actually the mitigation potential is limited. So you really have to give the project developer the incentive to say, okay, if I do X, I can reduce my cost of financing by 50 basis points, by 100 basis points. That would matter a lot when you issue a $500 million bond. So I think the sustainability-linked instrument is a particularly powerful way of achieving both renewable and nature-based solution scale-out.
That's the role of multilateral development banks, so would be also very, very important on reducing the risk there.
Well, yeah, I think, but just wanted to react a little bit about the carbon market thing. I think definitely, and then on the price issue, I think this is the way to really internalize the price of social price. I mean the carbon, the environment, or the climate, right? So I think this is really the way to how to really price sort of discovery, in a sense that by bringing in this instrument, so we can give a right, appropriate, proper pricing for this kind of thing. But at the same time, you also mentioned about, the question is that this green financing has been very much on the energy project and renewable. I think there's a reason behind that, right? Because I think in the energy project, I think there has been a fair amount of experience and knowledge accumulated within the financial institution how to finance the private kind of investment in the energy generation, etc. So kind of players know how to structure the project, and then you just bring in the green kind of component into it. For the nature-based solution, which I think is something that is really we should all need to should explore. But I think that we may need some time to sort of accumulate the experience and knowledge of how to sort of structure and design the project like that. And then also to, what kind of financial instrument that we can bring in to bring the sort of make it bankable, and then also, deliver the benefits for the greater society.
Thank you very much. Well, we have give and take 15 minutes for discussions with the audience, with the floor here. So that I would like to give the chance to the audience, to the participants, to ask questions or give comments. Yeah, 1, 2 behind, and 3. I think so. 3 of them. We can take 3 questions from the audience, please. Tengah ini. Please introduce yourself.
Thank you, the moderators. Let me introduce myself. My name is Adesyam. I'm from Lemhanas alumni and a friend of Mr. From my friend, Mr. Luki Murtopo, and also I'm also a member board of green industry field in Kadin, Indonesia, or Indonesian Chamber of Commerce, and also a supervisory board of Indonesian Waste Entrepreneur Associations and National Board in Jakarta. I'm just one questions maybe to all distinguished speaker here, and then about our topic in green financing today, but relevant in our problem in Indonesia, because the waste problem in emergency waste problem in Indonesia is national until Mr. President also will build a task force about the waste problem in Indonesia. So it means that we need some green financing implementation also maybe in the waste management sectors. So my question is to all of you about your perspectives about the waste project in Indonesia, waste management project. Like now,
is it bankable or not?
Yes. Also about the specifically of the project like waste to energy, because there's also the renewable energy also, and RDF as a co-firing from the cement factory and industry others industry, and also maybe how they can some investor or some parties to can bring the green financing in Indonesia to develop problem in Indonesia. So because the waste also is contribute to the carbon credits. I think that's, thank you.
Thank you very much, Pak. Next. Yang belakang dulu. Mana sih? Itu.
Yeah, thanks for the opportunity. My name is Steven. I am staff in environmental NGO, Hutan Itu Indonesia. I have two questions. I don't know who can answer my questions. First is we know that COP29 has been held in November or December. What do you think? Do you think that COP29 has strengthened the ASEAN's green finance? It's my first question. My second question is, so there will be COP30. What do you think? It will strengthen the ASEAN's green finance, or maybe there is an additional, like maybe the capacity of the finance, or maybe the new scheme. Yeah. Thank you.
Thank you. Introduce yourself first.
Okay. Thank you very much for the beautiful presentations and also the panel discussion. My name is Ayuba Jobate. I am a master student of sustainable finance, and I'm currently doing my master's thesis around carbon market.
Which university?
UIII, Universitas Islam International Indonesia. And I've also just recently submitted my paper on the review right now, which I developed a framework to help build resilience and both global and also international for ecosystems. So with regards to your discussion, I mean, since the beginning of this event, I've realized there has been an emphasis with regards to the gap of financing, to be able to meet the needs for the climate issues. And then recently I've come across a publication from Climate Policy Initiative, and then they've suggested a solution which they think by using this solution called guarantee could be able to help in able to tap into a private capital to help to close this gap. And so I wanted to engage Mr. What's the name again? From the private sector and also the development bank. Right, from the development bank, and then see if there is a possibility of this happening in Asia here. I mean, with this guarantee, it simply is a tool that mobilizes private capital to close this gap into financial investments that transfers certain risks to third parties. And then these third parties could be development banks, government institutions, and also private institutions.
Okay.
So, I mean, aside from this, with regards to projects also that can be viable, I think with regards to Indonesia, like it also already mentioned that 15% have been from Indonesia, which is quite huge. And I think mangroves in Indonesia here, one of the areas that investment could be done. Because when it's done properly, I think it has a potential to tap into biodiversity and also help with a lot that has the potential to become a solution.
Yeah, thank you. Thank you very much. Anybody would like to start responding to the questions? There are one specific questions, especially on the waste project, where how to make it more bankable and also can get support from the green financings in these regions. And another is on the financial gap and also the gaps of financings. And another one is on the the implementations of the policy or regulatory framework. Dr. Ma, would like to start?
Yeah, maybe I'll start a few words on the waste-related topic. In China, when we designed the green finance framework, we had actually 3 phases in defining what green finance should do. Firstly, it's pollution control. Secondly, fighting climate change. And thirdly, it's what we call circular economy. Essentially, we should turn most of the waste into something that's useful. For example, construction waste. If you tear down a building, most of the construction waste can be used to produce construction materials, right? Plastic can be used to produce new plastic, polluting clothing, polluting furniture, and everything. And recently, there are a lot of new inventions. A friend of mine, they said that they invented an insect, which is eating food waste. We have a lot of food waste every day. And after the insect eats the food waste, this insect is going to grow very big and very quickly. And this insect itself become a feed stock for chicken and for duck and for pig and everything. Yeah. So these are all circular economy technologies. Hundreds of them. They're popping up everywhere. And in Beijing, my team has organized a green tech competition every year. We did the 3 rounds. Every year, 100 green tech companies come in. Many of these are circular economy technologies. So this is an area you want to watch for. There are a lot of new developments, new methodologies, new technologies that's making these circular economy projects more bankable than before. Yeah? And secondly, there are lots of very experienced Chinese companies, investors investing in waste projects. For example, Everbright International. I met a chairman who just retired. He said he has done 500 waste projects. Every single is successful, it's bankable. Every single of the 500 projects. They do so much on waste to energy, all kinds of waste to energy, waste to gas, waste to power, waste to hydrogen, waste to everything. Yeah. And they do that in ASEAN countries as well. So I encourage you to look into these opportunities and working with the new technology, working with a very experienced team. And they have done this before somewhere else. And it's very likely to can reduce your perceived risk and get funding. Now on COP30, I think one of you mentioned, now this year I think one of the challenges that the US is not attending COP30 and the US is not submitting NDC and maybe a couple of other countries not submitting. So a big challenge they need to sort of overcome is to get enough of a new submission of different countries NDC, making it more ambitious than before. On the climate finance side, I think there are a lot of discussions on ideas that we generate. For example, some kind of guarantee facility which can reduce funding costs and support blended financing. And Brazil, in fact, I just met the COP30 president from Brazil a few days ago in Beijing, and they're interested in developing a tropical forestry facility, which again is funded by donors of different countries and helping nature, especially Amazon type of tropical projects. These are the things which I think will have some deliverables during the COP.
Thank you. Anybody else?
Maybe, sorry, Padoni, sorry, yeah. Just on the waste management, I think this waste to energy, I think there's, particularly in Indonesia, there's a lot of kind of discussion taking place, and then it has been actually for a while, right? So we have been very much actively sort of following, exploring if there is any way for us also to be able to help. But I think from the structure, project structure-wise, I think this is something that Donny might be able to know more. But it's quite a complicated the cash flow structure also, yeah. So I think there are some technical issues involved, but at the same time, its development impact, I think, is quite large. So naturally, that is sort of the area that an organization like us would be very interested to look into what kind of angle that we can come in. On the guarantee question, I'm sorry, I'm not very familiar with the mechanism that you're talking about. But however, I think guarantee is one of the instruments that is very underutilized in our institution. We do have the guarantee capability, Asian Development Bank, and I'm pretty sure World Bank has the same, sovereign guarantee. So just kind of really to create an enhancement type of thing. It is always in many for years has been the sort of the instrument that we want to kind of utilize more, but we haven't really figured out the right formula to do it. The one sort of thing that we have done is what we call if cap. That is the one that sort of, this is the part of I think it was climate related sort of loans and assets that we have can be guaranteed by certain group of donors in developed countries. So that kind of opens up our sort of lending headroom, because this risk can be offloaded. So in that way, that sort of it gives us a more bigger lending capacity. So that type of use of guarantee at the corporate level has taken place, but I think we haven't really been able to. I think that's the area that we should really work on to find out what exactly we can do.
Yeah, perhaps actually just to add to the question about the waste management project in Indonesia, just to comment, as Dr. Ma mentioned, actually waste to energy or waste management overall, whether waste to recycle, it's actually a bankable project. I mean, in many markets and so on, right? So that's fact number one. It's actually a not so difficult project in terms of financing, if being structured right. To Tominaga-san's point, in Indonesia in particular, now we have been facilitating quite a number of exploration on the projects. The issue is that structural issue was actually created by a number of things actually that, so number one is about sourcing or guarantee actually of the waste. It's fine and dandy, to be quite honest, actually to set up actually a, technology is also not really that difficult, but where is the project developer going to get the waste from? And you need that, I mean, in Bantar Gebang, I mean, can you actually get there's a lot of, let's just say, challenges, if you will, to secure that the supply of the raw material. The raw material is waste. There's a lot of waste, yes, but there are owners of those wastes, if you know what I mean, right? So the government actually needs to step in and create actually that guarantee. There's many foreign investors who would want to set it up actually here. The other one actually is the off-taking. If it's energy, you have to think about the off-taking. Create a project. It's very bankable. Financiers would want to come in, and many project developers, including overseas and domestic otherwise, would want to come in. But technology is not that difficult. But I think this is actually where the government or the provincial government, because waste management is very much not at the national level, but very much actually at the provincial, municipal, and so on. And this is actually the key, to create such a structure that guarantees the end-to-end of it, and as Dr. Ma said, actually it flies in most countries in the world, really. So that's the issue. Now, the second one, I think actually on the carbon market, I think what you wanted to ask is about, in particular, the NBS side of thing on the carbon markets and financing, including the guarantees. Let's just say that this whole, take for example, in Indonesia, this whole light at the end of the tunnel on Indonesia's voluntary carbon market with the very imminent potential reform on the regulation that would unlock that floodgate has attracted a significant interest from many financiers. Like ourselves, actually, we are in the midst of a number of upstream carbon developer projects. So banking is financing them. Indonesia's carbon market developers in the past have been financed by typically developmental funds. So there's no commercial fully yet to be unlocked. But as the market opens up, with that 15% potential, whatever, Indonesia would need a significant amount of capital to finance the upstream. So just carbon market is very similar to mining, if you will. Actually, it's just that what you mine is actually not, visible. I mean, but it is a real commodity, right? There's an upstream, there's a downstream, there's a trading of the carbon. It's very different, right? But the upstream one is very important, and that's where Indonesia has, meaning that either conservation or reforestation projects, RED Plus, whatever it is, actually that's the upstream side. There's a lot of appetite for financing. On the guarantee side, the guarantee actually in the carbon market can also be used. A few years ago, we went to the Indonesian MOF and suggested a structure, and we did a market sounding on the carbon market. So one issue actually, Indonesia's carbon bond. So basically, it's outside of the state budget or APBN, is to finance, attract actually, say $1 billion of capital, specifically to be directed to upstream production of carbon market, for reforestation, conservation, whatever. Now, that bond actually will also be helped at the time by Norway government, because they do have, initially they offered, why don't we become the standby buyer of the bond? I mean, that's a good and dandy, yes, but we believe that we will have enough buyers in the market. What we need is another, public sector, like the Norway government at the time, to provide the floor price guarantee. So in the bond sort of terms, there will be a guarantee because of the volatility of the carbon market sort of price, right? It's not as established as even palm oil or coal or the bad one, right? Actually, or oil and gas, actually they all go back. In the carbon market units, actually still volatile and maybe less established history. So provide a floor price is $10. So whatever happens, actually they will guarantee that all of the bonds issued, all of the credit issued actually through that financing of the bonds into the upstream carbon market project will always be bought in actually at $10. And that is a structure that can happen. So there's a lot of use, but the appetite is big.
Thank you, Pak Donny. Would you like to also respond, Ms. Yulanda? Okay. All right. Since the time is very tight, I think so. We no longer have time for other questions. We have to wrap up our sessions today. I hope the discussions would also increase our understanding from the presentations that we had before, or from reading our reports. We during 1.5 hours, we already discussed a lot about how the challenge that we have in ASEAN on how to improve, on how to support green financing in these regions. 3 words come in my mind when we're talking about green financing, so the challenge and how to address those challenges. Actually, first is the coherence. Greater regulatory and policy coherence and harmonizations is a must to make the green finance becomes more effectively conducted, effectively implemented here in ASEAN. The second one is the interoperability. We talk a lot about interoperability, and the report also highlights this interoperability on how this interoperability can also support green finance in the regions. And the third one is innovative. Being innovative in both in the instruments or in the project can help a lot, especially to make those projects to become more bankable, to become more attractive to the private sectors, to financial institutions to support those sustainability projects. I think so with those notes, I would end up. I would end my the sessions, panel discussion sessions this morning, and I would like to thank and give appreciations to our speakers here, and I'd like to invite you to join me to give appreciations by having a big round of applause to the all of you. Thank you very much, Pak Donny, Ibu Yulanda, Miss Yulanda, Dr. Ma, and also Tominaga-san. Yeah, for the insight and for the knowledge that you shared today. Thank you very much.
And thank you also to a big round of applause to our moderator. Actually, it's been very great. And I would say, Rizal, yes, thank you.
Thank you, Pak Donny. Thank you.
Thank you very much, our esteemed panelists, for the great discussion. You may return to your seat. But before I conclude the session and move to the networking lunch, I'd like to remind everyone that after lunch, we will have Dr. Ma Jun's lecture on the green trends and current geopolitical context. So we might start that earlier at 1:30 p.m. instead of 2, like previously written in your agendas. So please come back and join that lecture. You may enjoy the networking lecture, networking lunch outside.